Let's also talk about Bajaj Auto, which came up with its fourth quarter earnings yesterday. Now, while the export growth was stronger, the domestic sales saw a dip. Puneet is joining us to give us a more detailed breakdown on the same.
Well, thank you for that. So definitely Bajaj Auto largely in line with what the estimates were penciling in, roughly a 5 to 6% growth across revenue, EBITDA as well as profitability, while the margins have been maintained at 20% again in this particular quarter, the fourth consecutive quarter for the same. Now, the key aspect is that, this quarter, the domestic sales were up only, were down actually 8%, while the export growth was up 19%, and that is expected to continue in the next year as well. They have guided for roughly about 5 to 6% growth in the domestic market in FY26 and export growth between 15 and 20%. We've given this largely a neutral rating because there could be some impending risk coming from KTM that might impact margins in the near term. And Jefferies, while hiking their prices by to 8,000 rupees per share from 7,750 earlier, has mentioned that the quarter was largely decent, but they are concerned about the company's market share dip, which has happened, and the company's also acknowledged the same, that the market share has fallen to 24% versus 26% earlier. Jefferies is expecting a 13% EPS CAGR, but for the valuation that it offers at 26 times price to earnings for FY26, the growth has slightly started to dwindle now. So we've given this a largely neutral rating. Because of that, the number is largely in line, but not exceptional at all.
Okay, so